Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope you are able to hear me. The sound is fine. Let me display the PowerPoint presentation. Asian Session Live Market Analysis on now February 7th between 5 and 5:30 GMT. So we will track the market using the live market code page. So I'll give the link for the same. You can save the link in your favorite in the Windows and you can open it in a browser. I'll also focus it over that of the live market code page, the camera, and you will be able to see the live market code page now. So currently Euro is trading around 1.3610, 1.3612, and the low was 1.3550 and the high was 1.3622, and 28 pips negative positive net change is seen. So you would have noticed after non-farm payroll the market was not reacting to start with on Friday and then subsequently made the drop, and during the year session also initially they made the drop and then slowly gained the levels back to that of the high, and you find that now 29 pips positive net change is seen from that of Friday close. That is why Euro is trading above that of the psychological level 1.36. Then in the case of GBP also, it was holding high initially around 1.6185 and 1.62 level, and then slowly it started making a drop, and quick drop it made to 1.6132 and then came below that of 1.61 and came to that level of 1.608476 and that area. Then subsequently we find that it has gained back the level to 1.6132, 1.6136. 1.6084 was the low during the start of the session. They made the downward dip and then firmed up. 1.6136 is the high, and we come across 26 pips positive net change. But yen is also showing positive net change, so it is a contrarian move. 82.20, 82.23 are the current levels. 82.17 is the low and 82.28 is the high. Hardly a nominal spread of about 11 pips, and you find that it is showing 3 pips positive net change. So yen also made the drop on Friday and then subsequently gained the level. And in the case of CHF also, it dropped initially and then subsequently from that of 0.94 area it gained to 0.95 area. 0.9534, 0.9538 are the current levels. 0.9532 was the low and 0.9580 is the high, and market is staying closer to that of the low, and you come across about 15 pips negative net change. When Euro is making about 28 pips positive net change, USD CHF has made only about 15 pips negative net change, indicating a lesser dip when compared to that of more rise in the case of Euro. So they wanted to consolidate around 95 area and then they wanted to take it up. So because of the contrarian move indicated by yen, which is also showing positive net change. And in the case of Canadian dollar, 0.9863, 0.9867 are the current levels. 9863 is the low. Market is staying closer to that of the low. 9892 is the high. You find only 7 pips negative net change when Australian dollar is making about 16 pips positive net change. So more gain in the case of Australian dollar, less dip in the case of Canadian dollar. So the denominator currencies are expected to gain the levels to start with. During that, numerator currencies could drop and then gain the levels. I'll explain when exactly such drop and the gains are expected during today. And Australian dollar is trading firmly. Even on Friday, it came down to 1.0095 area and below that of the psychological level 1.01 and then subsequently gained back the level. So 1.0138 and 1.0141 are the current levels. 1.0106 is the low, 1.0142 is the high. You come across about 1 pip positive net change. So you find nominal gain in the case of Australian dollar from that of Friday close and Canadian dollar is also showing a nominal dip. Australian dollar is also showing nominal dip. In all the currencies you come across, their pip ranges from the Friday close or around 30 to 35 pips maximum. So what could we derive out of this? They are making contrarian moves by making the gains in the case of USD So obviously they wanted to gain the levels in a contrarian way during the day. So let me focus the camera over that of the PowerPoint presentation and explain what could be the possible moves for today. So during Japanese session, swing and firm up moves are expected. So Euro and GBP are expected to firm up, and at that time you will find that USD CHF and USD CAD and also USD Yen, they are also expected to slowly gain the levels and come to the positive territory. Then afterwards, European session, Euro and GBP and Australian dollar, the numerator currencies are expected to make the early European session dip. And that dip could be about 30 to 50 pips. And that could be just losing the levels, what they gained towards close of Japanese session. So they might revisit the current low or make a sporadic downward stop during the early European session, and then make a quick rise during the later part of the European session. Then during the US session, from that of the middle level, they are expected to swing and rise further. So early Japanese session, that is over already, and early European session, we could come across dips, and that could be the week beginning false move. And coming to this particular week, they are expected to set the trend. You know that first week they are expected to make the moves uncertain, and you know that last week they quickly gained the levels in the case of Euro and GBP, and then subsequently for non-farm payroll time they made the drop. And you know that because of that, people would have developed the mindset that Euro and GBP could further drop, but the players are expected to make swings at the lower levels and buy, and then subsequently set the trend on the upside in the case of numerator currencies as well as denominator currencies. Alternatively, they are expected to gain the levels. And sporadically, you could come across the downward stop in all, probably for a session or for a day and things like that. It doesn't mean that the trend is altered. They wanted to gain the levels in all the currencies alternatively. In order to handle the crosses, they are doing this sort of moves. And as a result, you come across the crosses started making big moves. You know that earlier, yen crosses used to make big moves, and gradually you come across that European crosses are making big moves, because traders find that European crosses are safe currencies, crosses to trade, because the spread between the high and the low will be about 50 to 60 pips. If they hold it, they will be able to book profit without any margin fear. But now they are making big moves in the case of the European crosses and lesser move in the case of yen crosses, because the yen has got a holding tendency. Why it is holding for a long time around 81, 82 level? It is mainly for those who have taken the loans from the Japanese bank. They are now due to repay that amount. So when they distributed loans at a higher level, when yen was trading around 118 to 122, 24 level, and they are trying to get back the money, even though no interest was charged or a nominal transaction cost was charged, but they have to pay through nose by buying a very strong yen now and repay the loan. This is how they are trying to make the money out of that. That is why unusually USD yen is holding for a long time at a lower level. And you know that now a similar situation has come with regard to US dollar, and many of the people have got the tendency to buy US dollar and invest elsewhere, and we normally call it as a carry trade and things like that. And gradually you'll come across that after the month of April, May, you'll find suddenly US dollar gaining in a big way, and those who have taken the short-term loans, they have to pay through in a very hard way. So people might think that interest difference or what the US is charging for the loan and US banks charging for the loan, and what the banks in other countries like New Zealand and Australia they are paying as an interest for a deposit, there might be a disparity. One might think that they could earn about 3 to 4% of interest in excess. But when they make the currency to correct or rise more than 3 to 5%, whatever they earn, they will simply lose it unless and otherwise they are very smart enough to decide on the exit strategy. So keep that in mind that what people are propagating is not the real beneficial thing for that of the traders. Probably this is one of the tactics of the financial institutions to attract the money, and then gradually they will see that those who have made their investment, if they are not appropriately exited, could lose the money. So one need to understand the strategy of the financial institutions. Then coming to that of the expected moves from tomorrow onwards, tomorrow 8th of February, we could come across that Euro and GBP making a dip and again gaining the levels and afterwards dip during that of the US session. So Japanese session dip and the US session dip could create an uncertainty for that of the traders, and those who have got the long position could exit quickly, but later on from Wednesday onwards they are expected to gain the levels in the case of Euro and GBP, and tomorrow they could gain more levels in the case of denominator currencies and hold it, and then from Wednesday onwards the numerator currencies are also expected to gain till weekend. So this is the general forecast derived from that of the algorithm. We will try to review it using the market reading from time to time, how exactly they are making the moves in the market, by referring to that of the initial lows and the highs, what they are set on a daily basis between 2:30 and 3:30 GMT. Today, 7th February, you come across Euro low as 1.3550. The high was 1.3622. They are not breached both the levels. In the case of GBP also 1.6084 and 1.6136. They breached the high by 1 pip. 1.6136 has become the high, and afterwards it is trading around that of 1.613236 level. So this may not be a real indication, and probably they could just doing this in order to handle the European crosses, and then subsequently towards close of Japanese session they are expected to form up both Euro, GBP as well as Australian dollar, and then subsequently make the drop during early European session and then continue the rise. So understand that the market, they will come across the swings, and during such quick drops one can take buy positions and try to keep stop at entry, and then try to do the position trade in this particular week, either from today or from tomorrow. They are expected to hover around in this particular area till tomorrow, and then subsequently make further gains from that of midweek. Then in the case of CHF, 0.9532 is the low and 0.9580 is the high. They are not breached the high at the low. And yen also 82.17 and 82.28, such a narrow spread, and that is also held. Then lows and the highs are held, and in the case of Australian dollar, low and the highs are intact, and Canadian dollar 0.9866 was the initial low, and they breached the low by 3 pips, and 9863 has become the new low, and 9892 is the high, which is not breached. So to start with, they had done only breaching of the high in the case of GBP and breaching of the low in the case of Canadian dollar in order to handle the cross. As you come across that Euro, GBP and yen are showing positive net change, so it's a contrarian move. There is no clear USD gaining or USD weakening move in the market. So let me minimize the PowerPoint presentation and take up the questions. Before that, I want to just display the FX Street has recently announced the best awards. So FX Street Best Award Survey So I am just displaying my blog. You find that handling crosses with the last post, and below that you come across FX Street Best Award Survey. So they are just keeping the link available for survey only once from that of a PC. So once you have voted, then afterwards from that PC you will not be able to vote again. And we are expected to spread this particular news for our advantage, or also for the advantage of FX Street. So the link is given here, and if you open FX Street homepage, if you are not voted, then on the top you will come across the link in a yellow band, and whether you like to participate in the survey, yes or no will be there. You can click yes, the link will open, this link will open, and you can click it. And once you click the link, then the survey page will appear as a pop-up window. Then you can choose in each category, and I am nominated in 3 categories, and you can just go through, and if you find that you can vote for me, you can do that. So, or you can vote for the best, whom you think that they are the best in that particular category. Then subsequently you can finish the voting or selection of the best in each category. Then afterwards, once you click the link, it will open only FX Street page, because it is capturing the computer number, and based on that it will see that you already voted, so it will not display that page again. So I will not be able to click this because I already voted. If I click, it will show only in a FX Street page. This is how it works. So, but if you try from another computer, probably it will work. That's what I noticed. Okay, let me go back to that of the questions and display the camera over that of the live market code page that you can see. Okay, here has got a question. Do you see GBP testing 1.60 to induce fear before GBP sets sentiments? Now, as far as Friday move was concerned, GBP came down below that of 1.61 level, and that created the sentiment, and the euro came down to that level of 35, 42 and things like that, and then subsequently gained back the levels. But now if you see that they may not use GBP straight to create the sentiment, during the European session they could make the dip alternatively in order to handle Euro GBP cross. You know that from 0.86 level they have brought it down to 0.84 level. You know that earlier they came down to 0.83 and went up. And before that, if you don't notice, they have come to 0.84 and went up. Then earlier they came down to 0.85 and went up. So this time around, they are expected to go below 0.83 level in the case of Euro GBP. So for that, they are expected to gain quickly in the case of GBP when compared to that of Euro. So they may not use GBP to create the market sentiment. They will only make a dip. If you are afraid, weak-minded, then your long position you will try to liquidate. And then afterwards they are expected to gain the levels. And they may not hold low for a long time for anybody to take a buy position there. If you wait to buy there, they may not show it. That's what anticipated. But we have to see what is really happening in the market. Then AUD expected to dip once below parity and then continue to set new high. No, I am not expecting that to happen now in the near future. And AUD, they just trapped a lot of short sellers. And on Friday also, from the when Euro and GBP were dropping, AUD was trading around that of 1.01858692 level. Then subsequently they made a drop to 1.0095 and went up quickly, and they are holding it again. So less dip and more rise moves could be seen in the case of Australian dollar, unless and otherwise the people become afraid of being short selling in the case of Australian dollar. So any other questions? Okay. Jason, what about USD CHF? Do you see it's below 95 before rally? I'm not expecting that much of drop in the case of USD CHF when Euro has gained about 29-30 pips. CHF has only made a dip of 14 pips. So the low is 95.32. Probably they will hover around the low and cut the low by 1 or 2 pips maximum and then go up. During firming up of Euro, during that of the late Japanese session, they could make a brief downward stop and if needed and then subsequently gain the levels in the case of denominator currencies like CHF and yen. Already they are in the positive net change, so the low is just hardly about 2 pips away and come across only 1 pip positive net change, so they could hover around here and breach the high. And in the case of Canadian dollar, you find that they breached the low. We have seen it. 98.66 was the initial low and they breached it by 3 pips and they are holding below that of 0.9866. So usually in the case of Canadian dollar, a downward stop and followed by an upward stop during the day or the type of moves. So they could do the downward stop and during that of the late Japanese session and then try to make an upward stop and from that of mid-European session. Giving some story. Then DTPT. Do you expect to see Euro around 1.35 today? I am not expecting Euro to go deeper. Probably they may just dip to 1.3578 or 1.3569 and things like that. Just breaching the psychological level like 1.36, 1.3575. Beyond that, I don't think that they will make a downward stop because they are holding near that of the high now. In Jack. Euro USD, is it expected to drop back to Japanese session before the European session? No. And if so, what level could it drop to? And in European session, how much low could it drop to? 34.32? You mean Euro going back to 34.32? Now I am not thinking that they will make a deep correction there. And even for non-farm payroll, they are not just reacted much. Keep that in mind when they are not reacting to that non-farm payroll in a drastic way. They are expected to make an aggressive move against that. And you just see the past history, you would be knowing if they don't make a full-fledged drop for non-farm payroll, and they may just reverse the market in a very aggressive way. So probably they may just go below that 1.36 level and make a little bit of downward move, but not a deeper correction I am anticipating. Then DTPT, what is your view on USD CAD? USD CAD, they are making a downward stop and you expect it to see above 1 today. Now above parity is about 150 pips and being the week beginning, they may not be able to rise that much. Probably they can go to that of 0.9699 area and hold there. Probably tomorrow we could come across Canadian dollar going above that of the parity. Then Jack. Between now and tomorrow, what is the lowest we expect? See, it all depends upon the gain. We have to estimate by market reading how much they can gain today. So first of all, we have to ascertain what is the week beginning false move, how much dip they are making, followed by that how much of rise they are making. If the dip is less and the rise is more, then tomorrow also a similar condition will be seen. That means they are trapped a lot of short sellers. They do not want to dip and give them the profit booking opportunity. In case the long holders are more, then suppose a dip of 50 pips is seen and a rise from there about only 100 pips. That means a net gain of 50 pips. Then tomorrow again they could do a similar move. And in case if they drop about 75 to 100 pips as a dip and gain from there about 120 pips, that means a net change of only about 25 pips. So about 100 pips drop and 25 pips net change gain. Then tomorrow they will do one more downward stop in a very big way and then try to make a rise. So we will not be able to foretell what could be the how exactly the traders are holding positions, because we won't be knowing how all the traders are holding positions, but the players know. So obviously the players will get that information from time to time from that of the interbank treasury and then try to handle the market accordingly. So when they handle the market, we will be able to understand whom they are trying to punish or from whom they are trying to earn. That way I will try to give the updates in the blog whom they are trying to trap. So we may think that statistically we will be able to derive all those levels by as given as a retracement and things like that, and you won't be knowing whether it is a first level of Fibonacci retracement or second level or third level or the fourth level, fifth level, etc. Okay. Then with regard to DD, USDN, USDN is expected to slowly gain the levels as you come across a contrarian move here. They sustain till close of Japanese session in a positive net change. Then you could come across more positive gains in the case of USDN today. So track it in relation to that of the net change. Then you will be able to understand. I explained many times how to determine whether they are going to do a downward move or an upward move in a given time frame. So when you see the net change, say for example in the case of Euro, 129 pips positive net change, and they are holding closer to the low, high, and low is quite far away. So when they are holding there and not breaching the high, and in case this is the middle session. So obviously we have to wait for the late session, because only during the early session and the late session they will be acting on that of the majors. So during the late session, if they breach the high and sustain above that of the high, then understand that they wanted to gain the levels. And if they make an upward stop and come below that of 36.22 in less than 30 minutes and hold, then you find still a positive net change. The first level of correction should be to that of net change of 0.0000. That could be the possible move. Then in case if a lot of traders buy there, then the next possible move will be up to that of the low. If they come closer to that of the low, then it will become negative net change. In less than 30 minutes, the negative net change becomes positive net change. You understand that it was only a downward stop before making a rise. So always track the net change. Say for example from 30 pips, if they make to another 20 pips gain and make only 50 pips, still they can reverse it. If they make up to 75 pips, still they can reverse it. But if they go beyond 75 pips, then you can do a technical trade of buy there, and they will go appropriately up to 100 pips to 150 pips on the upside. So that is how we will be able to determine using the net changes, because the net changes are being given by that of the interbank treasury. By that they try to control that the players are not making one-sided move for a long time. So they have got the daily limitations, weekly limitations, monthly limitations, etc. Within that, the players try to make the moves in the market and try to earn from that of the traders. Then, what do you see in the case of gold, Caesar? Gold is expected to set the low as 1,337 or 38, and then go up to 1,360 to 65 area. That will be the range. Similarly, in the case of silver, it will be around 2875 to 2965 could be the range. They are making nominal swings in the case of commodity pairs because they find both the long as well as the short holders in the market. They try to trap alternatively both the traders. Most of the traders are trying to do technical trade. That is, after the drop they try to sell. In the case of silver, that is why it gained very fast. And similarly, on Friday when Euro and GBP were dropping, gold and silver were rising. And earlier occasion on Thursday when Euro and GBP were rising and gold and silver were dropping at that time. And on Wednesday when Euro and GBP were dropping, gold and silver were dropping. So they try to confuse the traders by making such moves, but it will be in a range. Not an extreme moves will be seen because the players are focusing more on Australian dollar to earn money. Then Clinton, the principle of high, mid, low levels applies to daily moves, or is that only for the big picture? It's on a daily basis. Every 30 minutes you can watch whether it is in a positive net change or a negative net change, and you will be able to determine. If you carefully relate the high and the low to the current market level, and also immediately see what is the net change they have achieved from time to time, you will be able to develop a very good insight using only the live market code page for your trading decisions. But you are not afraid. You are really afraid to use it alone as a tool. So your mind hesitates to depend on that. And if you forcibly close your charts and all other statistical studies and just find the code pages alone, you will find your concentration will increase with regard to the market, and you will be able to really read, and you don't require any of an interpretation with regard to data release or oversold, overbought conditions, etc. Nowadays, if you listen to the webinars which are coming in FX Street by many of the analysts and the experts, you come across everybody started telling that the limitations of various type of statistical studies they have been using for a long time. So now you can understand that they are trying to prove it, but I have gone one step further and developed the algorithm and trying to give that solution. That's the difference. Then how can we expect euro to visit 1.38 area? Very soon we'll come across euro going to 1.3839 area in this particular week. Then Jack. In GBP, do you see a drop in European, and how low could it? Yeah, about 30 to 50 pips maximum from that of the current levels. Then balance. I don't trade on Monday as look to see what the player's intention. Yeah, that is also fine. See, that will lead to the safe trades. Once the trend is seen after establishing the weak beginning false move, then if you try to take position and you probably, even without a stop, you will be able to trade and you can keep stop at entry also and book profit. Then see the new high in Australian dollar. What is it expected high? So around 1.03 level, they put hover around for some time later on. Anurag, if players breach the initial high and neither rise nor come below initial high, what exactly the players earn from that stop and or extended move? So first of all, you should understand why they are doing it. Say in the case of euro, 1.38, 1.3622 is the high. And when they go above that of the high and stay above 1.3622 and hold the market, keeping up green buy order and sell order, a higher level sell order and a higher level buy order, automatically those who have shorted euro during the drop, because most of the emotional traders, when they see a quick drop, they don't sell, try to participate in that and try to take a sell, and afterwards see that the selling is making loss immediately. And if they hold it, the traders will try to see that it is not dropping further down, and then they try to average it. They try to sell about 30-40 pips above the initial sell, another sell. Then the players gain about, once the volume improves, they gain about 50 pips. So once they gain the first 50 pips, that they forcibly buy. How they buy it? They keep the higher level sell orders and try to buy it by themselves. It is a circular trade by which they gain about 50 pips. Say for example, they rise it to 1.3670. Then what happens? Immediately the short sellers come for a short covering. Because the gain was very quick to 50 pips by circular trade, immediately the short sellers think that they have taken two positions, both the positions are making loss, and they may not attempt to go in for a third position. The equity might really put a constraint on them, so they will go in for a short covering. because predominant of the traders have got a tendency to do live short covering rather than keeping a stop. And then they go in for a short covering, later on find that the market is not dropping and they start taking the buy position. At that time the players quickly gain the level, and if they try to buy it, they may not be able to buy it at the desired level. They may buy around 1.3695 or 1.37 level. After buying it, all become long holders. At the time the buyer should exit along with the other players. But if the buyers also wait, then they will just drop and try to hit the stops of the higher level buyer. And if he is not willing to exit out of the long position, they make another 50 pips drop and see that they are exiting. If they are not, then they will try to drop it more, because some buyers will go in for an averaging and all the buyers are making loss, then they will come to liquidate. This is the game plan. Every day, every session they do this, irrespective of the type of data which is released from various countries, and whatever the statistical analysis, whatever the fundamental analysis, anything of that nature. Say for example, when non-farm payroll was when it was released, they did not make a rise in the case of Euro and GBP because it created a confusion to that of the traders whether it has to go up or come down. But subsequently they made a small drop, and everybody started telling that US data is very good, so we have to take a sell and buy trade. You know that many of the people made the remark that it will drop, and afterwards they are late entrant in doing a sell and buy trade. If they fail to book profit, they would have seen that their positions are making loss. So for such a big event, which is considered as a big event like non-farm payroll, they simply discounted it. You can understand how the players can really manipulate that market. Then I missed your earlier comment on Euro. Repeat what? I said that Euro has got a potential to make a small dip and then gain in this particular week. Probably we can see even 1.38 and above. Gentlemen, you mentioned taking a position at low, get stop at entry, and this might become a position trade. Yes. Do you believe that in taking out like 80% with a profit at some point and leave the rest with stop at entry, trailing stop? Yeah, you can do it. There are other various strategies available. And see, suppose if you think of 80% of the position you book profit, that means you are gaining, you are entering more lots. See, when you try to enter more lots, say for example 3 lots you try to enter and book profit in 1 lot, and 2 lots you try to keep stop at entry and do it, fine. When the going is good, that will work. When the market suddenly moves against you, 3 lot positions will also erode your usable margin simultaneously. Keep that in mind. Always think about, if the market goes against me, what plans I have. Do you have a similar plan that if it goes against you, that you will exit in 2 positions with a minimal loss and hold the 3rd position? Then fine. It is strategically correct. And if you simply hold all the 3 positions making big loss, then it may threaten your equity. So always keep in mind that don't plan only when the going is good. You also develop a contingency plan. Okay, in the event if the market suddenly makes a move against me, see, anybody can give the forecast, and there is no guarantee that the forecast has to come true or not. Even I don't trust my forecast 100%. I always use the trading strategy to limit the risk, because the actual happening tend to differ from that of the expectations. Because you know that even the biggest companies in the world, they have the planning for the next year, the guideline values and things like that, the guideline with regard to the marketing and techniques and the employment of the people, etc. But still it is only a guideline, and suddenly some eventuality can happen and the entire thing can be shaken. So obviously they need to have the contingency plan to support the bottom line. That is very important. If they don't try to support the bottom line, that is keeping stop at entry or something like that, then if the event has has got a catastrophic effect, then they have to shut down the company. And nobody will take such a great risk. And similarly, in the case of trading, whether you use $3,000 as equity or $10,000 as equity, you have to conserve that particular equity. A person who is trading with $100,000, he may not mind losing $10,000 because you will be having enough earning from other sources. Whereas a person who is trading with $3,000 to $5,000 might be a hard-earned savings. And don't try to take a risk similar to that with a hard-earned saving, because if you try to lose it, it will affect your lifestyle. That is why when you are opening that trading account, they always ask you a question, but you don't give importance to that particular question. In case if you lose the money, will it affect your lifestyle? Similarly, you know that everywhere you come across the disclaimer, trading is risky. So you have to give weightage for that also. Then, Jack, for EURUSD, what could be the lowest stop? We can see if the European, that's what I told you, closer to that of the low, around 1.3578 or 1.3587. That could be the psychological level, above that of 1.3575. Or probably they may just hit the stops below that of the psychological level, 1.3575. And if needed, they may do a brief downward stop and below that of 1.3550. Because I explained to you that normally the low and the high which are set are to be prime numbers, not to be breached. Hope you are able to understand what is prime number. The prime number is a one which cannot be divided by any other number other than by itself. So you find it is a round number, 1.3550, it's divisible even by 5. And here it is 1.3622, it is divisible by 2. So they are not prime numbers. So there is a possibility that they could breach the prime numbers, that even numbers, and then go up. We have to see. So that is fine-tuning of your studies to find out what could be the low. That you have to do it live. I will not be able to tell you, okay, this is the fine number. By the time I tell you, market would have moved from there. So you estimate whether it is a prime number. Or obviously that odd numbers will come across like 17 or 19 or 13, and that sort of numbers will appear. Then you will find that it is a prime number. You need not even divide it by any other number and see. Just whenever an odd number comes here, you try to see that, okay, that could be the low. That is why invariably you come across a psychological level like 1.3550, 1.6100. Those levels are being breached in the market. And below that, the traders tend to keep the stops and the players try to hit the stops. Then USD CAD, do you expect to see trading around 99.50? Yeah. It is expected to go above that of the high today. Yeah, this session is being recorded. Doctor, what can you say about the Australian dollar staying around the pair? I explained many times that all other currencies, they have made the multi-year levels excepting Australian dollar in 2007, 2008 and 2009. So Australian dollar, you know that Canadian dollar came down to 0.90 earlier, and euro went up to 1.61, and GBP went up to 2.11. So all currencies, yen they brought it down to 79, and CHF they brought it down to 92. So all those things they had done it, excepting Australian dollar at that time. Now this is the time for Australian dollar to make some extreme moves. That is why I told you, don't do sell and buy trades. USDN is a prime number. Okay. So you just check it. USDN 111.46. 46 can be divided by 2. It's not a prime number. If it is 47, probably yes. And here it is in the case of GBPN 27. You know that 27, it can be divided by 3. You do it slowly whenever time permits, then you will be able to understand that importance also. Because all the moves in the market are being mathematically governed. That is why many of the people say that Fibonacci retracement works really well. But only thing is, we won't be knowing up to what stage of Fibonacci retracement, like 31.8 or 61 points and things like that, which is going to be reached. And 50% jack. For GBP/USD, what could be the lowest stop? GBP, yeah, the low is 1.6084. And it's about 60 pips. When it all depends how much they are gaining further up. They breach the high, they are expected to gain the levels during close of Japanese session. From there, they may drop about 30 to 50 pips. Okay, Steven. The first time that I heard about what you said in a monthly pivot from 2008 and 2009. Now, I am not talking about the pivot points. The pivot points are also derived of that nature. But a calculation of a overgeneralization. But ultimately, you find the turning points happen in prime numbers. Okay, so this further tuning of the pivot point calculations. So let me go back to that of the PowerPoint session. Okay, expected market moves for today, swing and firm up moves during that of the Japanese session, and a quick dip and a rise or expected move during that of the European session. And US session, you could come across swing and rise moves for the day. And tomorrow there could be a dip and then rise, and that dip sort of move could be seen in Euro and GBP. And from Wednesday onwards, you will come across more gaining moves in the case of Euro GBP. And I'll read the market and give the postings in that blog and continue to give that updates when needed. So I take this opportunity for thanking FX Street and also you people who have come here to participate. We'll see you tomorrow again during the same time between 5 and 5:30 to do the Asian session live market analysis. Thank you all and all.